Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. The recent action on the gold market mostly was triggered due by closing of the short position that we have estimated based on the CFTC report in the previous weekend. And we have made the conclusion that that probably could mean that investors do not believe in a further downward breakout in the current year, and they have preferred to close positions that were open as the preparation for this possible breakout. As breakout hasn't happened, they just have closed the positions, and the recent rally is not the real purchases, not real inflow in the money on the gold market, but mostly the closing of the previous short positions. That's why any further upside action will be probably very fragile because the closing of the short position mostly have the short-term impact on the market and is not able to support the rally for the long term. Oppositely to real purchases, real inflow in the money when the open interest is growing due to the entering and opening the new long positions. The Friday data from the SPDR fund also shows the tick down in the storages, so demand in the Asian market also stands weak. And it's really the big question whether the market will be able to support the recent rally and reach the next logical target that stands at 1265 area. It could mean the closing of the short positions and the general outflow of the money from the gold market could mean that investors do not expect really big action from the gold until the rest of the year. And from the technical point of view, market indeed could stand inside of the range of this candle. That's very often happens when the market creates some really outstanding candle, outstanding range on the market. This range could hold the further action for the long period of time inside of it. That's very often happens. From the technical point of view, the situation looks bullish in the short term because we have the thrust action to the upside. And in fact, this ABCD target has been completed just by the single trading session. It's very steep action. Second bullish moment is market is forming the bullish flag pattern right below the significant resistance, right at the monthly pivot resistance one, right at the 1208 fib resistance. And it doesn't show any bounce down. It doesn't show any downward continuation. It should happen when the market is really bearish. So retracement has happened. It has been over. So logically, the bearish market should continue to move lower. But this is not happening right now. Market just calling and calling below the significant resistance, and that could indicate the possible attempt of the breakout to the upside. Another pattern that has been formed yesterday, we have the bullish grabber in a direction of the current move up. So you can see market yesterday has formed the bullish grabber. That pattern suggests at least the taking out of this top. So in the short-term perspective, it's very possible action that market really could show the upside action taking out of this top and make the wash and rinse of this top. But this really will be the big question whether the market will be able to support this rally. And to lead market to the next target is 1618 extension of this ABCD at 1265. We have doubts about this action. This really could happen, but the chances on the taking out of this top, the wash and rinse, the clearing out of this top seems very possible. If we take a look at the 4-hour time frame chart, we see that the recent action down also looks as a retracement. Market has completed ABCD agreement right at the 3-8 support 1191. So you can see this ABCD has completed. The CDL is a bit flatter than AB, although we have in this acceleration right to the downside. Now market has turned to the upside again. Maybe market will complete some ABC bottom minor 618 extension here. Maybe this will happen or something of that sort, and clear out of this top. But we're not sure that this power will be enough to continue move high. That is our current view on the market, because it's very difficult to believe that the closing of the shorts was just the occasional action. Also, as investors have not taken any longs position, it's not a big amount of the long position, it means that they also hardly believe in a significant upside rally. So yes, market could clear out of this current top. Technically, it could complete some patterns as bullish grabber and something of that sort. But investors do not think that rally really could take the shape of the significant extension to the upside. It means that probably major opinion is that gold market will remain in some trading range till the end of the year. That's the most probable scenario based on the action that investors have made in the previous couple of weeks. So let's see what will happen on the 17th on the Fed meeting. But this is really could be the very probable scenario. Well, but in the short term, again, we absolutely do not object that the market really could take it out of this top as some Russian rinse action and return right back down. That's really possible based on the patterns that have been formed and based on the market recent behavior, because market mostly behaves, it seems like it's preparing for some upside action, whether it will be big or small. Because if market really was bearish, it probably already has continued to move down, but this hasn't happened. It means that the chances on taking out of this top seems not really phantom, and this really could happen on the current week.